Hi, welcome back to All Business Consultant. Today we are back with a new Excel model for our manufacturing business, and this time it is cattle manufacturing business. In order to review this model, we are going to go through these 8 different sheets. And before we start reviewing this model, you have to know that these P cells are representing the input cells, which means you have to make adjustments in these cells, and the gray cells are representing the lint or the formula cells, which means you don't have to make adjustments in these cells. Also know that this is a 16-month projection model, which means the total number of years in this model is going to be 5. Starting off with the assumptions sheet, here we have included all the major assumptions related to this business. This includes your financing assumptions, your production capacity, revenue and cost of goods sold assumptions. Then we have the capital expenditure and operating expenditure assumptions. This includes payroll as well. And then we have working capital assumptions. Next is the inventory analysis sheet. Because this is a manufacturing business, we have a production capacity at the very start of this sheet, and then based on this production capacity, we have calculated the opening and closing inventory figures as well as production and sales volumes, as you can see here. Then at the very end, we have calculated the per unit cost for the closing inventory and the total dollar value of the closing inventory for each month. Next is the revenue analysis sheet. Here we have calculated the total revenue being generated from each of the products and also the cost related to each of these product categories or products. Next is the supporting details sheet. Here we have included the major operating expenses of the business. This includes your fixed and variable operating expenses. Then we have payroll, depreciation of fixed assets, loan, and working capital. The working capital includes your accounts receivable, payables, and inventory calculations. Then we have the major financial statements of the business in this sheet. This includes the income statement, which shows the financial performance of the business. Then we have the cash flow statement, which shows the cash position of the business. This highlights the major cash flows coming from the operating activities, then financing, and then investing activities. And then we have the balance sheet. This shows the financial position of the business, and you can see that this is balanced throughout the 5 year period. Then we have the startup survey. Here we have compared the expenses and funding of the first year of operations of the business, and we have also included graphs for easy analysis. Next is the financial analysis. Here we have included 4 major financial analysis tools. First is the break-even analysis, which calculates the break-even sales point. Then we have financial ratios. These includes the major financial ratios of the business, including solvency, profitability, and efficiency ratios. And then we have company valuation, which calculates the NPV, IRR, and payback period of the company. And then at the very end, we have sensitivity analysis, and we have included both the pessimistic and optimistic cases for this analysis. Last is the dashboard. This is a graphical representation of all the financials that we have calculated in the previous sheets, and these includes your profitability graphs. Then we have cost of sales graphs, we have assets versus liability graphs, cash flow analysis, cash flow segmentation, and much more. Here we have also included a scorecard to highlight the major financials of the business, such as revenue growth, NPV, and IRR. That's it from today. Thank you so much for your time.